In his ravenous hatred, he found no peace, and with boiling blood, he scoured the umbral plains, seeking vengeance against the Dark Lords who had wronged him. And those that tasted the bite of his sword named him the Doomslayer.
And we're back for another chapter in the greatest story ever told about the greatest show we've ever seen. You'll notice pictures up here. Feel free to ignore them or pay attention to them. Some are more interesting than others. You'll see the price section over there, but down here you'll see we've got the ticker and the price. That's GME at 210. You'll also see over there there's a treasure hunt. You can win 10 grand. To the right of that's unreasonable.shop. You don't want to go there. Then you can see links below. You'll find in my description to my charts 24/7, so you can follow along. That's all free, of course. Everything is here. And none of this is financial advice. If it was financial advice, it wouldn't be free. It would be £500,000 for an hour of my time. So here we are looking at the charts, and we'll start on the 4 hour. If you want to see larger time frames, feel free to check out my previous videos. There are clips of them that are short, easily digestible, and very entertaining. I'm sure you'll enjoy it. I'm enjoying this cup of tea. So, on to the TA. As you can see, we've been putting in this negative formation with lower highs and lower lows until most recently when we put in what would be considered a higher low and may have changed trend. We'll look at that later when we touch on the relative strength index and the MACD on the lower time frames and talk about whether the trend did change at this low. And if you've been following along for a while, you'll know that apes that follow me like to buy at support, not resistance. So this is where we saw our volume. It was not necessarily apes. We expect it was actually the Russell rebalancing. But this came through for us over the period of between Friday and Monday and took us from the bottom to the top of this channel, which we touched even outside of. We got up and touched this Fibonacci, which I'll just draw in live so that you can see what we're doing, when we're doing it, and why it is that we do those things. We'll go just straight up to, not volume, straight up to the price action on the 4 hour. You can see lots of horizontal lines there, orange, yellow, and green. Those are support and resistance zones that we've marked in from previous work. We'll leave them on the chart and see which ones come up as we drop on fibs from different timelines, and from that the weighting that you can put on, or the importance of those particular levels of support and resistance, you can derive from the periods of which timeline I'm looking at. So that in a minute we're on the 4 hour, and that's where we're starting with these Fibonacci's to see where candle closes have come in on the 4 hour chart with regards to our Fibonacci sequences. And the first Fibonacci's, like I'm deleting a lot of them here because there are a lot to go through, and there's also this big one, but we'll leave that on for now because it's not something we're looking at. The levels on it, as you can see, were well above the 236 on our greater fib retracement, which would have come from the drop down in March, down to the buy in March from January down, end of January, start of February, down to February, start of March area, right? So that Fibonacci retracement that we're going through is the return on this uptrend, and of that we're above the 236. That level comes in at 143. So previously we had a horizontal level on there and we marked it in, and it may well be that in any sort of a flash crash that would be the level you would expect to see things turn around at. So if disaster strikes, and that's the way disaster likes to play its hand, in a very striking fashion, then it may be that there's your bottom level of support that would catch the price. But beyond that, I'm not necessarily expecting that, to put it lightly. Would obviously plan for it to be possible with regards to position management and so on, but with regards to the likelihood or the path of least resistance, that's dictated by other things, one of which is this Fibonacci that we put in here from our lows. Whoops, that's a pitchfork, we don't need that, although we could have used it. We'll instead go with what we wanted, this Fibonacci here, drawing from our lows to our highs. Now it's coming in from this low and to this high, and it's this uptrend, so we go from left to right, top, bottom to top, and in that we can see that the first Fibonacci, the area we'd like to be above, let's make sure that that's completely accurate there. That works fine. And as you see, it starts at that level of horizontal we drew in because it's where this low was put in at. Subsequently, you can see that this Fibonacci played a role, because in the next drop down in prices, we came in here and touched right on the, you can't really see it, but that's the 50%, drag it across there. You can see that this Fibonacci is in this time frame. There we can see some of the reason why it may be considered to be dominant in this range between 341 down to 116, and as such you'd be looking at the Fibonacci on here and you'd be saying, well, what are the important levels to hold? Well, the first and most important one is the 236, and if you can see it in here, I'll even change the color of it so you can see, right, this is the important ones to look out for on your Fibonacci are 618, and then the extensions of such, also the 1414 extensions, but then primarily what you're looking at is the moves between these ones. This is the nature of GME. This is how it plays out most commonly. It also then does like to every so often touch, now we won't use orange because we've already got orange, green and whatnot, we'll use bright blue so you can see it. Also often does come in around the 0.5, so when you draw that in on this Fibonacci, you can see there's your 236 in yellow, and that's important we stay above that price with regards to this dominant fib, and that comes in at 204. And on the 4 hour, did we get a body closes below that level? Yes, we did, but no open and close. As you can see, price action jumped previously. There was no open and close. There was only an, well, I suppose there was this open and close, but no subsequent price action within it, so it doesn't count. And then here we're below it, but we didn't manage to do an open and close. There was the close and an open, but not an open and then a close. So again, price action couldn't persist below it, and you would say that this fib is still dominant in some respects. Then you'd look to there and say the 236 is important, right? And it's at 204. The reasons why the 236 are important and the 618 are important, we may get around to covering that, but we're trying to do TA here in a summary fashion. If you want to see all these sorts of things, tune in to the live show. This right now is a clip I'm making during a live show. And there's lots of nice people in chat, and you'd be very welcome, so definitely think about joining in. So there's your 236, and that's why I'd be looking at a fib on that level. But you can see, because we're above the 236, this perhaps is not yet in play. You can't use it for determining future likelihoods if we are still above the 236, and so in those circumstances perhaps we should go and draw the next fib. Now you could keep it on the 4 hour, and that's perfectly acceptable because the 4 hour has been dictating trend, but you can maybe see slightly clearer if we drop it down to the 1 hour chart, prop it in our high, and we follow the trend from the top to the bottom, and then you come in, you see there's the lows, here's your 236. Of course the trend is going in the other direction, so your Fibonacci follows that, and so the levels have flipped the other direction, and you're looking to recover the 236. This is equally important here as it was in the other, and it's at 224, so you're looking for prices to get above 224, which is why there's this horizontal orange line here, right? And as you can see below, there's a horizontal orange line at where support and resistance was put in. That was where our previous low was put in on this time frame, so that's why this line persists. So you've got the Fibonacci is this yellow, you've got across here the 236, you've got also got this line, which is confusing everybody because it's yellow and I've chosen that as a fib, so I'll delete it for now. So you've got this 236, you've got this horizontal support, and there are two important levels below you. One matches up with this other the 236 from the other fib, and then this is your horizontal support, and so these are two important lines, and that's where price action is likely to stop if it should ever get there again. Right now, these are all obviously levels below that we've talked about for other reasons. But these are the ones that are most relevant right now, and you can see that when you look at the body closes and how price action has been caught in between these sort of levels. The 236 on this Fibonacci and the 236 on this one. That's where the vast majority of this price action has been happening. And what we'd like to see is prices go on again, right? And how could you determine if they'd go on again? Well, they'd open and close above the 236, and you could define this as being a turnaround. It would also be breaking above this horizontal support and resistance where the body close has been putting in on the hourly, and where we were looking on the 4 hour, you could see like the extended nature of that across like more significant body closes. You can see we're well within this downward sloping formation here. So to change that trend by putting in higher highs, breaking these supporters of these areas of resistance, and recovering these Fibonacci levels will be really, really significant, which is why it's going to be a tough ask first to break it, but then once we have broken it, it'll be a significant point in price action. And so people will say to me, what's the point in doing TA all the time every day and make that? It's because it's a continuum, mate. This fucking Fibonacci would move if the price moved, wouldn't it? Yeah, these targets all change, and so significant points in time, they become different, right? So you have to do it all the time, right? And I'm sorry if that sounds disdaining or whatever, but like, it's the fucking truth, right? And if you, in any way, I'm going to stop talking about that now. So tune in for a live show. Honestly, you probably like me, and if not, then you probably won't. So what happens when you break the 236? Well, then there are other levels that are important, and we've defined them a little bit by drawing out this coloured here on the 0.5 retracement on these fibs. And as you can see, that's where we've got another level of horizontal support and resistance, a line drawing of that, because it's where this body close came in on this 4 hour candle on the start of this rise up, and it's also where the 0.5 is on the retracement of that Fibonacci. So there's two confluent factors, and it may be an important area, and it would certainly be a marker for judging the strength of this trend, because once you've broken the 236, this move down is only really relevant at certain levels, and that next one is at the 0.5, and beyond that at the 618, and the extra little bit for the golden pocket, and that's where you're aiming to. And once you've broken the 236, it's quite often you'll see prices move there rapidly, and when I say broken it, I mean on open and then a subsequent close at higher prices, regardless of what happens in between time, but the open and close at higher prices than those levels at this 236, and then it could go rapidly from 224 to 277, 276, 269, right in and around there. There's loads of different other reasons, but that's your zone, and beyond it, a touch takes you up to around 287, and this is the technical analysis, and that's what you're aiming for. And should you do that, right, should all of that happen, then there'll be a question that people will be watching, and they'll be asking, and they'll say, can we put in an open and close above this level? Because if we can, then price action's only done that very, very infrequently recently. It would be a significant level to reclaim, and it would make a big difference to the liquidity that will come into the market in future, depending on when it happens, looking at the open interest and the options chain, right? So if that all sort of stuff happens, say, within the next couple of weeks, that would be an incredibly positive boon to the bullish, to the bulls, not necessarily to their thesis. Of course, that would all be confirmed as true, and we've talked about that inherently in the way that we drew this analysis. But also, the liquidity that would be on this side of the trade would be fantastic, and you could expect to see sort of crazy breakout moves, which may be things that take us up 343 and beyond. And where do you get those targets from? Well, they're derived partly from the fibs that you've been using, the extensions of those targets take prices up. And where does the 1618 take us? Where does the 1414 take us? These are the big areas, right? That's where you're really aiming for when you're going through breakout moves. And this also is a coincidence, is that our previous highs up here in when we had our all-time highs on GME at the start of the year. So it follows a very simple pattern, But those targets, those areas, those steps on the ladder, they're moving all the time, and whether or not they're the ones that are most likely to happen at any given moment will depend on the trend. So trend analysis is very important. And as you've seen, we spent most of our time in the upper time frames because that's where we do our analysis, because that's where the trend is most obvious. You drop down early and you can see, well, here's the 200 period moving average, and if you use that to define your trend, it looks like we're maybe below it. But if you understand the context of these moving averages, the way that these have happened, the retracements we've gone through in price action that have taken us here, and the amount of time that we spent in, and the formation that we've been creating, and the implications for it with regards to how long it's been evolving and the extent of the moves within it, and you study a little bit about technical analysis, and you know more than the average about, say, cup with handles or cup saucers or cup without handles, or saucers with handles, and those sorts of patterns, or even more, say, perhaps about Bulkowski patterns, and you're able to, say, factor in that this was perhaps a bear trap, and you put in all those calculations, all those potential outcomes, and you work out which one's most likely this price action is reflective of what sort of next move. Well, those pictures change every day, so it's important to do time to do your technical analysis, like regardless of how happy you are with your plan. It is still important to be aware of these things and to study them. And if I'm presenting them in a couple of minutes, then you can just tune in and take some value from that. I hope that's the whole intention, right? So when you look down at these 50-minute time frames, all these lines we've drawn out that may have at first seemed to be messy and unapproachable and hard to learn from, they're now like clear rungs that we need to clear on the ladder, and you can see these little guys standing in and around them, right? His head is actually where you want to be achieving, right? His eye line. I know that this guy's got his neck, but it's much of a muchness, right? These are zones, and so here's the first one. It's where we touched on our open on Monday. We drew all of this stuff out at the end of last week before when price action was down here, right? And if you don't want to check on that stuff, there's videos all over the internet about it because people enjoyed watching it, and you can find them obviously on this channel. But others are on Reddit and so on. Whatever you search Tradespotting, you'll find it. And so, like, these sort of things is what we're looking for. Does it have to go in that sort of trajectory? No, not necessarily. But because the way these downward sloping channels work, right, they're quite often, you can look at them at different ways and say, well, before we had these most recent highs, perhaps it was like a wedge and X, Y, and Z. You can look in it and say, well, maybe there's some sort of W pattern forming here, and then draw out like a sort of measured move from that. And also from the top to the bottom of the channel is quite a common move. So with your logarithmic chart, you'll see the scale of this stick moves. Drop it on the breakout zone, that's about there. You're given that 60%. You could say, hey, who knows, right? Maybe you get the full whack. It takes you to 382. If you broke through these levels of resistance, then perhaps you would have a bit of momentum. And we could have spent time looking at the MACD. We could have even identified talked more about the fact that volume is so low. And why is volume so low? Well, volume is an indication of the transactions, right? That's not necessarily buys or sells. It doesn't mean no one's buying it, so it's not going up. It doesn't mean necessarily that there's a problem, because it also, there's the other side of the trade, and that means that nobody's selling it. And so in this contraction of price action, as things get squeezed down, as the true range of the candles decreases, as we put in like a flux on higher lows and lower highs, you'll see that that's indicative of a coiling of a spring. And this volume profile is entirely neutral. All it means is that nobody's selling, right? And when no one's selling, liquidity dries up. And when liquidity dries up and it dries up and it dries up, then volatility increases. And volatility tends to explode rather than slowly build. You can see the building in the consternation, in the hesitation, and when it doesn't move. And if you're to turn it on and see it, as I've been well known for doing on calling big moves, looking at it, and one of the ones I was looking at in particular was this 4-hour signature that gives us the best possible moves that you've ever seen in the history of this stock, our stock, Gamestock. Go back and you see, well, when is this signature for the biggest moves we've ever seen on price action given? And it was here, right? It was here in July, in August, in November, before price action absolutely fucking smashed the ceiling and destroyed the short thesis and absolutely took this fight to the hedge fund's front door. This happened off the back of this indicator, and I talked about it. It's called the HVP, Historical Volatility Percentile, and Simple Moving Average by Ballypoor, and deserves all the credit for inventing this, because he did, nobody else did, he did. And the way you read it is you look for signatures in the past and compare what happened at that time with price action, and here we have the start of an incredible low. It's never been so low before, right? When it went up, and the only thing close to this is its previous big rise, which itself is blown out of the water by this one. It's this low, right? Where are we? We got to that low, and I made a video in the middle of the night called it Bing Bong, and a lot of people heard about me because of that, because price action then went absolutely fucking bonkers from wherever it was here and to wherever we've seen it since. And that looks like a big move, but the truth is that hasn't even fucking scratched the surface, pal. Shit's gonna fucking explode. We're only at this part, right? We're only here. If you look at this and you say, well, what's going on with this? Like, what's really happening with this indicator right now? Well, where is the 4-hour signature, and how does that look compared to here, right? Well, it looks like that there. That's what it looks like, and then when it gets there, it goes even fucking crazier, and that's when prices really, really, really fucking explode. And what does that remind you of when you draw these? So you drag them over here, and you can see, well, it looks an awful lot like that, doesn't it? It looks very like it. And what happened afterwards? Well, something like this, right? We came in and we broke certain levels, and at that point, prices went fucking crazy. Broke that level. We reached this level, and where did shit kick off, really? Well, it dropped back from here, but then it went fucking mental. So this was the level. And where are we? We touched it, and we dropped back a little. Do we have a little bit more to go? Well, it dropped back down to here, so it could come a tiny wee bit more, but this is historical volatility percentile. It measures the volatility as a percentage in relation to the past, so that doesn't necessarily mean price action needs to drop. It just means that even the best strategy that the short hedge funds possibly have against us gives us a signature on the charts that tells us how to win. And if you want to see more about how to win or where price action is going, check out Tradespotting, like on YouTube, where I cover these sort of things every day from bell to bell. Lots of love. See you in a show sometime.